Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. It's the 21st of January 2026. Thank you all for tuning in. Let's have a look at the markets this morning. Let's start with I want to start with the daily here. Give you guys a little snippet of what's going on here. So we had a key level here yesterday, just closed below it. It's that mean threshold of this last down close candle here. It's a mitigation block. Maybe not. There's a small swing right here. It makes its own swing and takes itself out. So if we ignore that and look at this whole run here, it's a mitigation block because it doesn't take out the highs here. So we come back, we mitigate off of the imbalance we have here, and then we continue to run higher into the mean threshold of this candle. And then we start to pull back, and we have this SIBI here. So we want to see if we're going to send this higher. We need the SIBI. On a 4-hour, you'll see a SIBI in a 4-hour in a minute. Now we want to see that SIBI hold price and then go higher. Well, it did. It came down inside it, respects the mean threshold of this last down close candle, and then started going higher. So what we wanted to see is it get back above here. But if you look at this small range here, the premium is sitting right in here, and it's a small imbalance. Came back up into that premium, hit it perfectly, and then we withdrew down. So now you're back inside the small range again. So now we have to decide, where are we going to break that high or break this low? Well, we actually hit it, opened or gap down, and then went straight for our mean threshold. Took out this imbalance below us here. So to me, it's got heavy now. We can come back into this wicks up. We could see the low of this candle all the way into this little imbalance right here. So I've got this imbalance, this low, and this imbalance here. We ran through that one. It's the lowest one. Traded back into it, and now we're heading lower. So if we don't get a revisit of this morning before taking that out, then I'm looking for this down here, and that's that 24.56 that we're talking about last week. Okay, so if I go down into a 4-hour chart, get rid of this. This is since mid-December here. You'll see this cyclical pattern over and over again. We have a low taken, trade above it, trade back into it, take the high, make a new high. This is the range extension model. Range continuation model. Here, continues to go higher. Then we want to see a reversal. We see a reversal. We trade back into the reversal. Now we're inside this range. From this high here to this high here. You'll see it. We don't have a SIBI in here, so you have to pull back to the next level. And it ends right in there. So we see it retrace back into that SIBI. Looking for this premium. We get above it. We get rejection block. It does not make a new high, but we do get a new BISI here and a SIBI, so they're going to overlap each other. So now this is where the battle begins. We're inside this smaller range here now. It comes back down into the mean threshold of this last candle, runs back up, finally clears that high. We get range extension. We trade back into the BISI. Continuation. That's as far as you continue. Just taking out the high again. Rolls over, and now we've got this small little SIBI or BISI right here because we've made a new high. You trade back up. The bodies respect it. Clear out the low. Trade back into it. Continue to take out these lows. Heading into this new SIBI down here. We did not break through that. All we did was just pop through with a wick, but the bodies are still respecting the 25% higher range, so it only penetrated up to 75% with bodies. See a small little BISI right here, sorry, a SIBI right here. It's up in the premium or the discount range still. If I pull my fib tool on this, I'm just trying to show you that there's a continuous cycle of rinse and repeat. And it's right there. So that's the 50% right there. So as soon as we get above that, you're into the premium level, you're into the P1, P2, right up to the top of P2, then the reverse, change in direction. You trade below it, trade all the way back up inside it, go beyond it. That one would have kind of thrown, oh, maybe there's a small imbalance there. You have to stretch that out. Nope. Because if there was one there, maybe there is. Nope. Then you wait for the downside to close. Closes below the downside. You say, great, that's right on a Friday. You'd like to see, now you say it should go lower. I wanted to see it gap back up into this one more time and go lower. Instead, it just gapped straight down. Gave you the indication that, hey, look, I'm getting out of there. This busy, I want to close below it. And that gives you the indication I want to go lower. So it literally gapped down below this level we're looking at here. Or sorry, this is the new week opening gap. It's below the rejection block and we're inside the SIBI still. So I want to see a retest of the SIBI when it closes below. Or this next one was just small imbalance down here. Trades through it, comes back into it here, and continues going lower. So we're looking at this one here on a 4-hour. This is our next 4-hour section right here. So what you want to see is you want to see it close through here and then continue to push for range extension and then the continuation model, which will take us down to that imbalance. We talked about it a few minutes ago. So that's what I'm looking for, is a continuation down into this 24 and 4 area, another 1,000 handles or more. That's the 4-hour. So the 1 hour. We traded through, rejection block again, didn't make a new high. Traded back through the SIBI one more time. Found support off of it perfectly here. Ran lower, rejection block, pay yourself. If you get the low, which you didn't, you got a small retracement back into the SIBI. So that's the new go, no go zone. And you get the no go. Or you get the go in this case. We're going to go lower. It's a no go if we go above it and start running higher. So that's the no go zone. Hit it nicely, rejected off of it, and we started hitting lower. So this is our 4-hour target. And then you had a downside target there of the week, perhaps. So we'll see how this little range happens. So now if we start to trade back through this order block, get on top of this and take out this little SIBI inversion here, the go no go zone, and then we get on top of that, then we're looking for a run probably back into this old high here, or these short-term highs here. But right now we're bearish. All the time we're staying below this guy here. We're bearish. So keeping in mind, we've got a pool of liquidity up here. Quite easily run up for that for 9 o'clock. Or take this liquidity up here. We've got a pocket from discount to premium here. And then if we take that, we got P1, P2 up here. A little choppy, we might just get something good here. That's where we're sitting on a 15-minute chart. Five minutes already broken the high. 1 minute's already broken the high. So about 6 minutes ago, 8 minutes ago, we have this low taken SIBI. You ran above it. Take out this little premium here. Came back right inside that. Sent it higher. If you want to wait for a body to break this high, it does right here. You come back inside it. Send it higher. Next bull trap. We're right through that. Heading for the premium. Right through the premium. Now you want to see it retest the premium and go higher. It just went straight into extension. Now you want to see this hold. If it doesn't, then we're looking for the first little return back in here, which is your BISI. If that holds, great. We'll send that higher. If it doesn't, then look for a continuation back into this guy here, because we missed it once, so we could be coming back to revisit that. There's a huge suspension block here from there all the way down to here. But for now, look at this one. So this is what you're looking at in all your charts, whatever level you're trading on. I used to think that the 1 minute chart was just too noisy, but it's not. It's perfect data points as well. So we're reclaiming this fair value gap again now. Look for a retest down here. This is all one giant block, so from here at 75 all the way up to 106. Good morning, Hadid. How you doing? Lucky Dog, good morning. Mardeep, good morning. I haven't seen you in a while. How's everything over there in India? Have everything still going well? All those people you're helping out over there? That's still going well, I hope. It's a very noble thing he's doing there. You guys should hear his story. It's quite amazing. Okay, while we're waiting for that to settle out, we've retested this low here. Let's see if we push through here. So this is kind of like the 15-minute. That's the whole range right there in the 15 minutes. So if we push up, I'm looking for this 15-minute to hold here. Internal range liquidity on it. I want to see if that holds. If we're just going to come up, roll over, and come back down again, then our two key areas are here and here. Not the SIBI on this side, but the BISI on that side. I know Michael goes for the SIBI. I like the BISI. That's all. I would even want to see this reject off of here and go lower. How's the D this morning? Lucky Dog, how are you guys doing? I hope everybody's well. Let's look at ES here. ES is in a similar situation, though it's already got a SIBI here that's ran through it once, ran through it twice, again. Again, not interested in this area. Some would consider that the bear flag. So a bear flag broken would just run straight up into this premium. And there's really no premium there. Oh, there is right there on the 15 minute. So we'll wait to see if we get a market structure break, a little pop up into this consolidation displacement. Wherever we get displacement here, pop it up, come back inside, look for a run to the premium level, which would be up here. Oil. $4 in the morning. Market structure. That's a nice little displacement. Come back inside it. Run higher. Okay, so we've traded below here on a close. So I want to see this whole breaker now provide some support. I'd like to see that roll over from here. I broke my 300,000 last night. So in just over a month and a half, we're up $200,000. Play money. But treat it like a real one. You gotta treat it like a real one. I'm gonna see if I can do that, how big I can make that in a year. And I'm not gonna trade more than 10 lots. So that's a short right there. Inside this range, you're targeting down here. And keep in mind, you're looking for any signs that is not going to pan out. You see a reversal setting up in there, then you don't take it. Morning, Russell. Morning, Lucas. I like that just going short there now. Actually, I like to go short right there. It didn't let me get in there. I'm not going to keep hitting it because every time I've done that, it's like, why aren't you clicking? I click, 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 and all of a sudden they all load up and you're like 9 handles in. But then you can't put a stop loss in there if it starts to rush away. It then finally pops back in later. I like that about trading views. It gets kind of, there you go. So that took the time to get in there, right? So I'll just put that up above this whole breaker. I don't want to see the breaker get taken to the upside. That would take out this candle here, which I don't want to see. And then we'll run deeper into that range. I'd be targeting for here and here if that candle gets taken to the upside. And we're just looking to run down into here. And it's right on that It won't even let me move it now. There. Just above the consequent encroachment. That's all I want. Usually it comes down, tags the consequent encroachment and leaves, so I'm just above that. I'll leave that one there to do its thing. And we'll see if that's small. Not a significant displacement, but we'll see if that is enough to send this lower. I like the fact that we've broken through the civvy on the downside. We've come back up inside it and had a nice little snap off of that. We're looking for a wheat to get back above here, and then we're targeting this 525 area. Gold's got a nice little run in gold again last night. And I went to bed, and it was that one panned out quite nicely. Now I'm looking for gold stuck inside that small range right there right now. Got from mean threshold to mean threshold here. These two candles are in battle. Wait for one to break through. There's no BISI above us here. I think they're kind of overlapped. So I'll wait for it to break out of here. But that's, look at that, up to 40, almost $4,900. Like new record highs for gold. They're not kidding when they're talking about $8,000 for gold. I heard the rumor that it's going to 8,000. It's kind of one of those interest pieces, because you heard people last year say, oh, gold's going to break 3,000. We're like, no way, man. It's going to take forever to get up there. And literally, it's doubled in price since then. So somebody's talking 8,000. Why not? Why not 10? Well, S&P's on a little bit of a pop there, hey? There's that displacement. We've got above this candle. Literally opened above it. Came down inside it. Went through the mean threshold into that SIBI, and now we're running higher. So let's watch to see if we get above these two candles now. Let's look at silver. Nice range extension. Rejection block. Nothing. I got nothing right now. If we come back into this level, look for a retest on these old lows here. There's a little BISI down here. There you go. Just hitting it now. How do you forecast a rocket chart like silver? Well, you can do your, once you get a consolidation and a breakout above a consolidation or a dip back down, then take the retracement here and then project up 1 to 4 banger higher. I think I was predicting right there $100. That was one of the levels I was looking for. So $100 in terms of fib projection. These are my fib projections. So there's, I can't remember what number I put on those, but you just see how we're hitting this level. This last level, this was the, look how many times we're banging off of that level that I picked here. And this one just literally ran to it, below it, tagged it again, finally hit the third level. So now the next level up is $100.42. So look for the same kind of setup there, Lucky. Look for a setup that gives you a new long and your target's up here. And keep in mind, if that's your target, you keep looking for any chance for it not to get there and roll over and come back down on you again. Your nice little consolidation. You want to see a nice displacement higher now on a 1 hour chart. While it's pissing around here, there's a small little imbalance down here. If you see it run down into here, remember I talked about this area being retested. I want to see that get big retest there, and I don't want to see that get broken just yet. If that gets broken to the upside, then I'm starting to look higher. So this, you've got a breaker here that sends it lower. You got a breaker here, they're kind of overlapping. So if those two bull traps get taken to the upside and retested, then I'd like to see that go higher. Otherwise, still short. I'm not short, but I'm still going lower. Our little crypto, or not crypto, our little Forex friends. How do you feel about Forex? I like to see that go higher. So I like to see that, that's a euro dollar, go higher. British pound has not quite broken through the bear trap yet, or bull trap. See how the euro, if you look at the comparing the two, which one's the strongest one? Euro is the strongest right now, right? So if you look at euro and you say, if I was in this little swing here, and I say first candle on the left, which is the bull trap candle, if I can get through that, and look at that huge displacement, came all the way back to the bottom of it, hit it, and now I want to see that one go higher, right? It's taking out bull trap 1, bull trap 2, not quite the third one yet, but it does taking this one out here. And you look at the British pound comparatively, you know, you look at the bull traps that they have. This one here to there, this one here to there. This one here has not even been broken to the upside. They've already blasted through it. So this is the strong one. This is the sixth sister. So if this pulls on price to come down, we should see this break through here at 134.17, 134.15 on the downside, come back, retest this area, and then start setting it lower. And you're targeting 133.90. You can get through that. Look for this big old price imbalance here. One side delivery only. That's for British pound. If we break through this level, if this lets go here now and we start to trace back through the back of it, watch a retest of it from behind and then send it lower, because I have no SIBI here. So that's the one I'd be looking for a retest, and then send it lower. And that's what we want to see. Canadian dollar get a little stronger, send that lower against the British pound. So I don't have to pay too much for British pounds. It's almost $2. We thought the American dollar was bad. It's almost $2 for one pound. It's almost $2, $1.85. And their things are like twice as expensive over there. It's insane what we pay for coffee and stuff over there. Ecads. And at that price exchange, nasty. Still waiting for Ford. Has to get way down there still now. Atlantis is still, I like that. Get on down here. That's what we're looking for. March, April. Come on into here. Bitcoin. All you Bitcoin people out there, what are we up to? This little wick here is a little more surprising. So I would wait for this whole area to get broken out of on the hourly first. Wait for this market structure to shift above here. Because you did get a close above this level, but you notice how the 50% of it was closed back through. We came back into the candle, and you went, uh-oh, we're going to head back into this thing here. And sure enough, it went all the way to the bottom, but this wick, it wicked all the way through into the rejection block, and then we got another change in direction here. So this comes back into this candle. I want to see it start to really drive up hard through here, because you're at the mean threshold of this candle, and this one is the one you want to see hold price before going higher. So that will be these three candles here. Just come down and give them a little kiss. Mind you, we've taken out that one as well now. So its mean threshold is what you want to see, which is exactly where that's sitting right now. I want to see that go higher. So on a 1 minute chart, that's a 5 minute. A 1 minute chart, where are we at? That's this block here. This is the premium. Hits above the premium, does a little range extension, comes back inside for continuation, and then you get continuation. So, and you see how we've traded below here, traded above here, come back into it. So wait, because otherwise you're going to get chopped up inside this consolidation here. $100 is my target because it needs a nice number. Then my suggestion is put it at 99. A lot of people are expecting $100, and it just tends to go just short of that and drive people crazy because a lot of targets are sitting there. There's a lot of people that are aiming for 100. So put it at $99 or $98. Mark my words, man, you may not see the 100 for a while yet. It may just go right up to it real close and then roll over. You saw that happen in Bitcoin years ago for $20,000. German DAX, here's a nice little last couple of minutes, or last a half hour or so ago. We've got a nice little change in direction right here. Look at that, perfection. Tagged it, left, you're inside this range from here to here. Ideally, I would take this larger range, and then you're targeting you got to get above here. So pay yourself inside this range. Once you get through here, you're targeting the BISI, which is way up here. That's a nice little run. Pay yourself on the way up. Get above here, get back in, run yourself there. It's really taking off now, isn't it? Yes. So we'd get above this level, right to the bottom of it, right there, right there, that whole breaker, right to the very bottom of it. So if you're one tick below that low, as long as that one tick is, that's like half a tick. So if you're one tick below that level, you'll be squeezed and then all of a sudden suddenly left on you. So it would have come down, give you a little kiss on the nose and literally run above. Being one tick below that low. It's presently running at half a tick, quarter of a tick. So watch to wait and see where that is going to end up now. If that closes above here, then look for, we're changing direction here. We've got one change in direction. We've closed above this one. Now we're running one candle's ran through here, here, here. So we're waiting to see what is the very last one it runs above and closes, and then look for that one as the support to go higher. That's typically how I look for a big bold candle like that. How do you treat a big bold candle that runs through all these different arrays? Wait for the last one it closes above. Good idea. And then if it runs to $100, lucky, don't get mad at me. Just be happy you made some money. Because people tend to use a lot of emotion for hindsight. It's like, why get upset about that? You made a decision to stop at 99 or 98. Stop right there. Wait for a retest, wait for a new setup, and keep going. No different than you would looking for if this was making new highs above an old. This is at, imagine that's SMT making a new, or S&P making a new high, and this is a brand new record high. Then look for a retest and then send it higher. And there's no target to aim for here. You just pull your fib tool, get the run, look for a 4-banger, then a 5, and then just keep, or just get in the trade and use your take profit model 3. Take profit model 3 is also, when you take profit model 3 pays out, that means the reversal model 1 is kicking in. I've kind of designed them that they kind of dovetail and overlap one another, so one protects the other. So if, as soon as one goes, then you can jump right into the next one, provided all rules are maintained, of course. Took lower lows and MO. What's MO again? Last high, last low, and MO. Modus operandi. What's your MO? I will save a small amount for 100 emotionally. Good idea. Waiting to short ES. This could be just a wick run above here to kind of clear up the liquidity that's above the market here. I don't see anything else really in here other than this inversion at 6869 to 6877. See if we get anything off of that. The 1 minute now is giving us a break in market structure here. So look for a retest of this level here and send it higher. This is the new week opening gap, or a new day opening gap, I guess. Is that what that is? Where's my 6 a.m.? I'm going to get my 6 a.m. at 9:30. So if we go to a 1 minute chart here. I thought there was a line you could get in here that I'd cap warning. There we go. There's a small change here. I want to see this little structure shift here. Look at this little level right there at 68.60. Watch that level. Good morning, Jean-Paul. Good morning, good morning. Bonjour. Shepard, my friend, how's things? Jean-Paul, we might see a reversal today, looking for indication that price will confirm higher prices. That's the indication I'm looking for right there on the hourly for us to run higher. And we're just running inside this range. So fib tool, low to high, look for 50%, which I'm sure we've already hit. This is where it starts to get really kind of, yeah, 50%'s already been hit already. So if that's just a stop run and we see this reversal right here and this market structure shift, then I'm bearish again back to this candle. And then this SIBI here. If we break through the SIBI here on the downside at 68.29, then I'm looking for continuation lower. And we're still looking for those on NQ, it would be down in that 25, 24 level. Like 24.8, 24.9 level. So change in direction. So we're bearish right now. We have no candle above here yet. If this wicks 50% holds, which is right there, watch for a retest of this level here. Waiting for a 4-hour close. Gotcha. I'm looking lower overall after Tuesday's wide range down. Took out the swing and then targeted December's low. There's the retest. Now I want to see that accelerate through here. So the next target would be this new day opening gap here. Those on NQ. Waiting for this structure to break here. NQ didn't have one of those little bissies. So you wait for a structure break here. And then this whole thing all the way up to the mean threshold there. And this now becomes our new bull trap. That bull trap is validated the moment we break this low right here. So new bull trap, that's more padding for us to go lower. And ES has already given us our bump off of here to go lower. So you want to see ES take out this low. See how NQ, we've got a lower low and we have a higher low. So ES is holding back. So until ES breaks that low, then we're looking for we don't want NQ to lead the way. Usually ES is supposed to lead the way, and the ES is just giving us a little dip, but not a displacement yet. So that's the difference between the two. So we want to see this drive down here, get back in sync with the other one. So we've got that low is now taken. So now that whole, ideally, we want to see this low here get hit. Let's give it a little kiss right there, all the way up to 50%. I don't want to see more than 50% of that get taken. Otherwise, bull trap. It just did a little run on liquidity down below us here. This didn't. It held price back. Now, if we run back through this level and take out this candle here on the high, and that we look for that as support above, and it's just, this was just a quick little raid down here, and then we want to see that order block get taken to the upside and then start running higher. Right off a 6 a.m. candle. ABS's 6 a.m. candle. We never did go over here, did we? Remember, we're calling for Citibank to make a reversal now. Look at that. It literally gapped open yesterday, wicked up a little bit, dropped down lower. So this, I want to see this provide support now for this to come lower and take this low. We've got equal lows below us. So you can run back up into here. And then I want to see that roll over and take these lows. Then if it takes those lows, then you got a nice deeper run into here, 50, 62% of that larger range. Walt Disney has finally come back inside the sticks that we put out there yesterday. So now I want to see if that holds. If we close above that today and retag it, the sticks now become the support for a running higher. And it should really start to take off if it does. We take out that candle, those two candles right there. We should see that really accelerate through here. We had higher. Otherwise, I want to see that stop right there, start to pull back into a wick, and then roll over and go lower. So that's the daily. You see how the hourly has this gap here? We've traded through the gap, and we're taking out the first candle to the left. This one, and then this one. If we get a close above them, look for a run back up into that 113 area. And if we close above 113, we should see an acceleration up into this new high, or at least up into this next level here at 114.22. See where that sits in the next couple of hours to see what happens here. Yes, finally giving up the ghost here. That's good. That's holding price right now. You really want to see this let go here and drop down. Get back in sync with this. NQ has already made its decision to go lower. It's traded below here, traded back up into that 50% of that wick, and then went lower. As mentioned. Keep in mind your hourly shows you got 22 more minutes in the hourly to really see what's going on that. If ES is just holding back, then it's forcing we're not closing below here. So we've got that SMT divergence going on here right now. If this is refusing to go lower, it's holding price back. So we want to see if it clears out this high here. And then NQ is forced to get back in sync with it. Clear out that one. Find some support at that. And then we'll start running for those highs again. So be careful, Russell. Where it ends, where that, see how we've broken up above structure here. We've come back, found support at it, went higher, broke the next one. We came all the way back to retest it. And now we're starting to go higher. So if we break this one on the 1 minute, don't be too keen on us running any lower for the short term. Wait till the open. If you marry the idea that we're going lower, when the horse is running down the field in the opposite direction, either wait for it to come back, wait for your setup, or adjust your goal posts. Another retest of this breaker here. We came all the way through the midpoint and ran all the way up into the body of it and right to the top, right to its open. Patience, that's what we're talking. That's what we're talking. See how it's holding price back? It's a regular trading hour gap right here. Look at the bodies that are respecting that top 25%. So showing strength, staying in here. So 9:30. This is our first presentation for value gap. So if we trade below it, come back into it, looking for this to finally break through here. Then you'd want to see NQ blast down. So far they're holding. NQ, it's pulling ES down here. Watch that level right there. She goes. Start rocking it through here now. Come back, give that a little test. We got body breaking below the lows. So this is a continuation model. So I'm going to see this get hit here, all the way back up into here, roll over, and then take these lows, or take this new low out here. So you've got an overlap here and here. This low's been taken. So if we close above here, on a close, then you're looking for this and this as support to go higher. This just run back into here and here. I want to see it just tag that at 68.53. Right there. Now I want to see it roll over and come lower. Remember, we can come all the way to the top of this. That little poke through, I don't like to see that. So precision is when it just stops right there and rolls over and comes lower. So this little poke up higher into the rejection block. Are we revisiting this premium up here again? And are we going to take this high? You get into these little consolidations. What you want to see, if it's not manifesting, then wait. Because if you just try to buy into it and then it keeps going higher, you think, ugh, I got to wait for that to stop there. Set me up to say, okay, I've got confirmation, good. Now I can take my next trade into that level. It's really holding back. So NQ is pulled back. Reverse direction. Watch this candle here. So we're now at this candle and ES, its candle. They've made a lower low. Lower low. So now we're more bullish than bearish. And come all the way down into here now. So this first presentation fair value gap, you went through it. You tapped it, went through it. Now you're back through it again. You got to wait for a shift in structure. Right there, I want to see that hold and start pushing higher now. Stay on the horse, man. We're not taking a trade right now. We're just trying to stay on the horse. So you'll hear opinions changing direction. That's because the horse is spinning, turning. We just want to stay on it. When it throws you off, it makes its run. You got to try and stay on it. We're above that level right there now. So let's come back and even retesting this right here. I want to see that go higher from here now. And that should take NQ higher. Let's get above this candle. See how this one has not closed above the high here, and ES has. So ES has got strength. NQ is trying to hold it back. Still wants to go shorter. And ES is saying, I never wanted to go short in the first place, and I'm pushing it higher. So now it's coming back. Retest this level right here. Now watch the mean threshold, which is also this first presentation fair value gap again. Tag that, send it higher. Or just open right there and with aggression, run it higher. That'll really put pressure on this guy to break that. Yeah, I've already looked at the hourly. We're looking for that this bold candle right here on the NQ. That would be all the way up to here. So for a 15-minute, you're looking at this guy here. There's your premium box. You want to see that break, come back, find support at that, and start pushing higher for NQ. So it's another short there. See how this is finding support here now? That's what you want to see, that acceleration now. Good. And you've still got 12 minutes left to go. And you're way up in the premium range now. So this is what you want to see, a nice little displacement candle like this. And then we'll wait for the next hour for us to come back, either tag this and go higher. Its mean threshold is where you want to see that hold price. Ideally, I'd like to see this form a fair value gap here on the hourly. So 10 o'clock, 11 o'clock. Just give us an institutional order flow entry drill for a grade, an A grade, A plus entry, or an A level entry for a continuation on the outside without even coming back and tagging that. That would be a B, more like an A. That would be like an A level all the way down to the top of this, because this is a rather huge one, right? So if we get this BISI, or create a BISI here now with a nice displacement candle all the way back up into here, watch this level on the hourly. It's the go, no go zone. If we run through that, come back into it, targeting the mean threshold, rejection block, and then old highs. Then I'll be targeting up here for this new week opening, these two little new week opening gaps. I'd be targeting this one right here. See how we broke above the high, come back, revisit it. That's a continuation model right there. We've got the extension. This is the continuation, so that's continuing higher. It's way above it, but it's still in the formation candle on the hourly anyway. If you're using the hourly chart, you have to say what candle am I in. And yeah, it's above it, but it hasn't closed above it, so you can't assume that yet, because that could just turn into a wick and come all the way back down, and you'd be pissed that you didn't, that you got in while it was forming. It's that one that screws with your head. Like this is the screw with your head sight candle right now. Don't play with the sight candle. There's some things you can look for in the sight candle, but you got to be super careful what you're looking for in that. Otherwise, it could just suddenly rip back against you. So always kind of make your decision at the close of that candle. Then say, right, we've closed here. This now is closed above that candle. I want to see this candle act as support now, all the way down to its mean threshold. Its mean threshold tends to line up with this new day opening gap right here. Bounce off of that. I want to see that go higher now. Let's see where the logic is. That's a logical point of data that you don't want to see it break below that, and that's nice. Takes out the high. Sweet. So I don't want to see it come back and revisit that. Now I want to see that just keep going higher. Though it can come back and just tag the top of that little order block one more time at 86.67, 68.67. Right there. Tap it. Now go. Don't come down any lower. Right there. Freeze it. Send it. Send it higher. Takes the high. Happy days, man. Happy days. 4 seconds. You want to see that close higher. See? See, senor. That's specific data points you're looking for, and that's precisely what you want it to do. Go higher. It does, and there we go. Got to have confidence to look for where do I want to see support. I want to see support off this candle here. I want to see it act. Now that I've broken that high, I want to see it come back, tag that. That's a nice little propulsion candle, and I want to see it as soon as it breaks that high on a close. I like that. Now we can come back to its mean threshold is the line in the sand. It is also a data point, which is the new day opening gap. It ran higher and go, okay, now if it does come back, it can touch the top of the high, which it did, touches the top of the high, and then you want to see it go higher. It did. And away we go. Those are specific data points. That wasn't just some fluke stuff. Those are specific, and I explain the reasons why. So you've got 7 more minutes. This is great. Now, if you feel like you should have chased that, go crazy, man. You're crazy. Just wait. We're right up inside that go, no go zone, right? That 50% should stop right there. And I like to see that roll over and come back down, or at least freeze in here for the next 6 minutes, bounce up and down in here, and then wait for the next candle. And that first 15 minutes is going to tell us what she's going to do. Morning, Abs. That little 6 a.m. candle of yours is quite a sweet little sister. You got a sweet sister, man. See how this was just running for liquidity? You got this little change, order block, break the high. We break above it. You come back inside it, found support. Look at this one here, found support at that. Ran higher. There's nothing up here. Away she goes. Now, whether or not you took that as a trade, that's up to you. It's still a bit sloppy, especially this little wiki stuff here. That ES is much sweeter. Like it just looks cleaner. So that level right there, which is what we're looking for right there, I'm looking for that to be a holding point right now and see if we can come back into this range. Because I don't want it to take off too far before coming back and giving us an entry here. So we're looking for it. This is the extension. Now I'm looking for continuation model. So I want to see as soon as that high gets taken next time, provided we close in the next 5 minutes below that level, I want to see a nice little trade entry. So you're looking for this to come back down in the next hour, and then we're looking for the 1 minute for the reversal. As soon as it comes back into this level, we're starting to look for any opportunity to catch along here. So you watch to catch it on a run back higher. If it continues to push all the way through this, look for the high of it and see if that breaks through. If it breaks through, then we're looking for this to provide support. We're looking for any retracement back in here to send it higher. And you're already up into the premium range already, so you've missed the big run here. You didn't catch that reversal this morning, then like here, retest. No, the swing here is the high. So if this is the swing low, consolidation, CAM model 1 entry. I don't know if we have any CAM model entry traders in here. What's that? Traded right through that level. She's gone. Don't chase it. She's gone. See how this change in direction here? Trade above it. That's our long there. Close above here. Come back, retest it. Go higher. Above that old high. Trade back into it. Go higher. What do you got here above? Customer encroachment. The hourly busy. $68.80. This looks like a great opportunity to catch some 10 o'clock reversal. So I'm looking up here now. I'm looking for any chance to catch a reversal here. We're looking at the mean threshold, or what is called the event horizon right here. That's sitting at 68.88. $68.88. How did our oil trade turn out? Well, we're slowly waffling around here, hey? So now that we've come back into that level, we found support at that level. I don't want to see this get back above here now. So I'll cut my loss in half. We're still targeting the discount box down here. We're doing a box-to-box trade, albeit slow. Gold. I see nothing in gold. Silver. Silver's crap right now. Not clean at all. So just wait. Wait for it to close above here, and you're targeting these bissies. This little whole suspension block up here. Find support here. I'm going to send that higher. Now, British pound is finally catching up. It's finally broken its bull trap on a close. So you want to see it come back, just give that a little kiss, and then send it up into this premium box up here. Targeting 134.74. I'll put the little line right there. That will be the target once we hit this. we've already got the change in direction. Body closes above it. We come back inside it. Nice little run higher. So as soon as it breaks that high, move your stop loss to 1 tick below the low here. Move yourself into profit. Pay for itself. Pay yourself at the high. And look for a retest. Don't want to lose more than mean threshold of that at 134.90. 134.38.9. I don't want to see that go lower than that for pound. If this now becomes, we trade through this mean threshold on a close. So if I was long on that, my stop loss would sit here. I wouldn't want to see it come back down into that again. So watch that wick now. 25% of the wick right there. You don't want to see another freaking dip down in there. Though you could get to 50%, which is 50% of this as well. 50% of that wick is 50% of this. So line in the sand is there. Stop loss goes here. You're in profit if you're going long. If you're waiting for your entry here, go down to a 1 minute chart and look for a reversal here to continue going higher. Then you'll look for a range extension and then a continuation once you break that 117.30. Too close. Good morning. Running late here. Abs is already here. Above hard part maybe getting a long entry here. Now just think about this. You're in. If you're trying to get long here and chase this, then you got to wait for a market structure shift above here now. And you'd only be targeting that second new week opening gap right there. And it's literally on top of it. So for me on the hourly, at least anyway, you've hit your limit on trying to catch. You won't be until you catch a nice little reversal or a traction to catch a range extension from here. And we're already way too high in the premium. So I'm just looking for the last data point, which is at 688. And if we want to know specifically what it is, we go like this. We take 1 and 2. So we get 2 different viewpoints, which is right where we just stopped right now. So the bodies are stopping there at 50%. Or we take this one and go on the last candle. And it's 86. 68.86. 68.86 right there. So mean threshold of the whole candle, the whole breaker versus the last up close candles, mean threshold. You're right at that for 2, the turning point. So I'm looking for a reversal in here for a short. I'm not looking for a long right now. I'm looking for a short. Do you guys understand the logic of that? That's why on a higher time frame, we'd look for a change of direction at a specific data point. If you don't know what those data points are, you need to study them. So you've got this right here. See that run now? Just come back and give that a little kiss. Short there. Stop loss will go just above that. If we start to close back through here, close the trade out. And if it closes back above there in the next 15 seconds, then I think I'm on the wrong side. So then you wait for this structure here to break on the downside. So we're closed above it. Now I'm on the wrong side of that. That's all I'm giving it. The top of that. Chase that right down now. See how we've closed above that level? Now I want to chase this right back down to break even if I can. I'm out. So now I got to wait for structure shift, either below here or above here. That level is failing. Mind you that there's a little tiny stretch this out here. You'll see it sitting right there still. And that's one that's holding. This should be up to here. We'll see. Now it's up. Open up there. So now I'm going to wait for structures. If we can get above here, then you can catch it long again. So is that go no-go zone? It's a no-go for a short, and it's for a long time now. So you're looking for a retest in here and then start going higher. That was what this retest is. Back into here. We closed above it. So that's a long. We wanted to see it run back through here and go lower. Well, there's the rule is if it trades above that, then we're looking for a long now. So I just want to see confirmation now. I want to see it break above this high here, come back, find some support at that. Keeping in mind that that's the mean threshold of that last up close candle. So that could be a limit. Could be just doing a little run up, turn around, come back down again. Making a 10 o'clock high. See how we knew we were on the wrong side of it here? There's the tap. A nice little closing candle above here, and then using this as support to go higher. Targeting the rejection block next at 68.95. I'll give me a small little candle here to finish off, and then we'll get an institutional order flow entry drill. Looking for there's the retest. I'm going to buy one there. Stop loss has to go down here. The next one will be right here, right off this low here. There's an institutional order flow. That's what we wanted, a small candle there. Fair value gap above. That's your A level trade there for a long. Buy another one there. And you gotta be one tick below that low. You want to see this stay open here now, for that to go higher. And the mean threshold, if I start to see that get violated, I'll close the trade out, take another loss. But right now I'm looking for a continuation model. There's your D level, almost D level, because you have to include this whole thing from here to there. Let's do that in quarters. There's B level trade right there. That's okay, Hadi. We all get bad days, man. Did you marry the idea of this going lower? This would be an interesting thing to document in your journal today, Hadi. Like, what was it? Where did your mindset go? Were you focusing on this has to go lower? I have to expect it. And if you marry the idea, you kind of force your brain into looking for something that's not really there. And then when you stay on the horse, like this here, we saw this, we called this, but I didn't take it. And hindsight, obviously 50-50, 100%. We swept a low. Want to see that get taken on the upside? It does right there. still uses its support. So you got confirmation. Then you say, all right, I still want confirmation. I want to get out of here. So if I clear that high, then I'll take it. See, we still didn't take that either. So we have a change in direction model, internal range liquidity model. We have box to box model, hit it, extension model there, continuation model. All four models are sitting right there. And look where we are in price. So now we got a change in direction. So we're through that midpoint. I'm out of that trade. It just took me out. So well, it happens to us a D. The obvious ones are staring us in the face, and then all of a sudden it changes direction on us. So we got to think this mean threshold, let's go. If I get a market structure shift now that we've hit that, we've got a little wick up into that body, but no body has broken this yet. This is just the wick. So now I want to see if we break market structure here to get back into a short again for down here. Just stay on the horse, man. Write it all down. And when you've got two directions literally overlapping one another, you're gambling, right? Which is what we're looking for here. We're looking for this to continue going higher, but the higher time frame says that's a resistance area, and we have no body breaking above that yet. We just had a wick up there. And a 15-minute chart says, hey, look, this would be an institutional order flow entry drill below here. So anywhere inside here, which is a nice little target to aim for. And we're already hitting the lower part of it. So mean threshold of that candle, that lets go, looking for the low. And there's no real SIBI in here to key off of. So you have to use this last down close candle or the breaker here. This would be nice to see it come back up into here, roll over, and then come down and take that out. And I'm not touching that because we're still inside a really small range anyway. So wait and see, man. Gold is on a turn going down. There are no bad days, just lessons. Just make them micro lessons. That's it. You never have to worry, Hadi, about saying, I'm a bad person. And I know you don't anyway, because you're Eckhart totally, man. Power of now. Stay positive. You know you can read the charts. Sometimes you get kind of lazy with your analysis, or you marry an idea, and that's about recognizing that in yourself and journaling it and being honest with yourself. Don't beat yourself up because of it. It's not a weakness. It's not a weakness. It's just like Jean-Paul says, it's just a lesson to learn, man. I have days where sometimes I don't focus, or I'm distracted. Write down, what's going on with the family, what's going on with your health, what's going on with the weather, what's going on with, money, stress, all these different things that can take your focus off the ball. So here's a retest of this level, and I want to see that hold and see how we can argue both sides now. Even though this hasn't really taken out a swing point, I have a SIBI, a BISI. So this BISI right here and that mean threshold, higher time frame overlapping. We've just come down into this candle, this breaker here, last down and close candle, the important one. Tag that, and now we're back inside this small range. We're right back up into the premium portion of it right here. So does that hold? So you can argue both sides. Just wait for market structure to shift above or below these two levels. Yeah, that is why today, of all days, I just sit watching the 4-hour close. I'm looking for clarity, not forcing anything. I have good profit from pre-market. Good for you. I have this thing about I want to stay above 300,000 now. Now my focus, I'm trying to see how far I can take this account for the whole year. So up till December 12th of next year, or of this year. I want to see if I can turn this into $1 million. So we're just sitting and waiting for S&P to do something. What's NQ doing? NQ saying, nope, we're heading higher, man. I'm not interested in that. There's the 4 hour. There's a lot of darkness and a lot of shadows. The clouds are above us. We're sending a rocket straight into the dark clouds above us. Now let's just look at this NQ, for example, versus the ES we just looked at. We've got a change in direction. Notice there's no retracement like in here. See how we've got this little retracement? Give you the entry right here in ES. NQ did not give you that entry. So then you wait for the market structure to break above you. Wait for this bull trap to break. We break it right here. We come back. If it's strong, it'll find support at that bull candle. And the next one, which is sitting right here, this runs through both of them. And what did I tell you about? Always take the last one, which is this one right here. This one's higher than this one. And look where the mean threshold is right here. It lines up almost right on this 3 hour candle. Trade back into the mean threshold of the 3 hour candle, right into the consequent encroachment of it, which also lines up with the top of the bull trap. Comes back in it, hits it nicely, drives through, and then we do the same thing above this high here. Do we get a candle that closes above it? This one does. This is the graded response that we look for above a high. So that's an A level or a B level trade. If you take the consequent encroachment of this, if you take the suspension block here from there to there, and you pull your quarters into that, the first 25%. Oh, sorry, got the wrong one. Remove. See that? First 25% is an A level trade. That's your A level. And then you're looking for, what is that? Why did I put it there? Sorry, should be right there. A level, B level. So you get your A, a little bit of loop over. You didn't get a B, you got an A level entry for continuation on the upside. And again, they're just simple rules. If your emotions get in the way, then that's the only entry other than this one here. That's the next entry for a long. Right? And as soon as that closes below there, and that would have closed right there on it, you would have said, I'm out of the trade now. If that's a take profit model 3, there's your take profit model 3 close. You're out of the trade, trades back into it. Now, the moment it breaks this high again, you can say, great, if we get a candle close above here, I can look at this as support to go higher again, right? So then it closes above there, comes back in. You say, great, now I'll get you along on that. Again, ones and zeros, take the emotion out of it. Trades back into it, goes higher. Takes out the high, rejection block, pay yourself, move to break even, and wait. Change in direction right here. Body trades below it. You think, great, now if it trades back into that, I can get that short, which is what we were looking for. Then it trades through it. You go, I'm on the wrong side of that. On a close, if it comes back and tags it, I can get that long. Catch it long, pay yourself a rejection block. Comes back in, tags it one more time. Finally takes the high, pay yourself. Again, that's all straight logic, data points, and saying ones and zeros. But every time you take a loss, man, the emotions come to the surface. The self-judgment comes to the surface. The doubt comes to the surface. There's that level again. See how we're just finding support at it. Ran through it, hit it. Back inside the range. Look at that SIBI inside. Break above the high. Come back, retest it. Go higher. That's a buy. A little, still, you want to get practice getting in that. Don't chase it. So just wait. Wait for the next setup. I think Trump's speech was a good one in Europe. He was very positive in his comments, direct but positive, made it clear that he will not militarily take Greenland, which is what the markets needed. That guy's a lying bastard. I don't trust him. A thing he says, Derek. I don't buy anything, any bullshit that comes out of that man's mouth. At all. He's a lying toe rag, that guy. Wouldn't buy it, wouldn't pay, I wouldn't listen to a damn thing he says. He's just entertainment now. And unfortunately, a very dangerous man. Not because he has military behind him, because he's nuts. There you go. There's my personal opinion of that wingnut. Look for the rejection block here now at 68.95. 68.95. So we're looking for, and then if we run through that, I'm looking for this next new week opening gap here. There's the retest, that high right there. Go higher. He's only 7 wars. Isn't it supposed to be 8? Isn't he supposed to 8? He's supposed to get 8 Nobel prizes for every war he stops. Isn't that what he thinks he deserves? I watch that guy and I think, how in the hell could people have voted for that idiot? But anyway, what your political reasons are, I don't care. That's just my personal opinion from an observer from above and the news media that is driven my way. I don't listen to that wacky news, Fox News crap. They're nuts. They're not even real reporters. I listen to some of the logic they keep throwing out there, or supposed logic, and it just boggles my mind that people can't see this is all manipulation. They're just manipulation like crazy. So anyway, I'm not going to keep talking politics because I know some of you probably support that guy. 68.95, there's your rejection block, done and dusted. And it doesn't mean anything. I don't have any judgment on anybody. Whatever your political or religious beliefs are here, I don't care. It's all good. Now you got to hear mine. So anyway, that's just that. We won't mix that with this. So rejection block's done now. So look for the wick, take your wick, and if you divide that into quarters now, we're looking for this first new week opening gap, and then the second one, I'm looking for this old high here now, or taking 50% of the wick on our way up. And 66904 is also an upside objective. Love you, but we're on opposite pages. Yeah, I know, Chris. I know exactly. I know you mentioned before. I think it was Chris, or was it you? No, it was somebody else. They're on the totally opposite side as well, which is fine. That's why that's because we're in a place where we get to have that option. You get to have free speech, and you get to have your own political beliefs, man. That's all there is to it. It's a good thing. Still got the love. Still sending the love out there, my friends. So looking at now, watching here, because this rejection block, you want to see it go higher, and it fails in the rejection block. So any opportunity you see here for a nice change in direction. So you have to see a market structure shift down here. But internal range liquidity hunt, I want to see a change in direction here. If not, that's the next upside. He's only 7 wars. I don't agree. I think the media may portray it that way, but don't agree with their profile. He's not my favorite person, but he does care about our country. People can't just pass their own personal views. love you, but we're on the opposite pages of politics. Yeah, I don't mean to make a political statement, just wanted to suggest the tone of that speech at 8:30 was the impetus in the market moving in the right direction. Sure, absolutely. That's great. I appreciate all your opinions, man. I appreciate your opinions the same as I hope you appreciate mine. I'm just an old burned out medic. What do I know? What do I know? And that's the point, you know. But a lot of people get you they're so upset to talk about anything without feeling like they got to defend a position. Just because you believe it doesn't mean to say it's true, right? I don't live in your reality. I don't live down there. I don't live under all the stuff that's going on there. So all you can get is influenced by whatever you get delivered to your eyeballs. And then you have to try and make sense of what you see and piece together. You know, you watch Jimmy Kimmel all the time, you're going to get one side. So I hope you guys just a view. It's just an opinion. It doesn't mean anything at all. If it's an opposing view of yours, you stick to what you believe in, man. Anyway, where did we get sidetracked there on a political trail, hey? On ES, we just respected and then bounced off an old first day fair value gap. An old day first fair value gap. See that consequent encroachment of that or mean threshold of that lowest down close cap is what held price back, hey? That's right at the mean threshold of the daily. Look at that snap off of there. And we're right back into 4 hour. Any one of these places could be a turn point. On ES, he just respected and then bounced up from the first daily. We're actually doing well down here. LOL, wages up, inflation down. Okay, waiting for 11 a.m. macro. I would disagree with that with the teachers. Your teachers are not paid at all down there what they're worth. 30 grand is not worth it, man. 30 grand is nothing. Your teachers are just definitely not paid what they're worth. Waiting for, and that I know for sure. Waiting for 11 a.m. macro, we took relative equal highs in NQ, though, and new week opening gap maybe next. There's that first one. This right here would be the premium box way up here. It's also in the reverse no-go zone and in the premium box. We're already through the no-go. We've used the no-go to keep pushing higher. You're into the rejection block now. New week opening gap. We're just touching the edge. Nope, we haven't hit the edge of the no-go zone yet. So I'm looking for 69.04. Old high. Retest. Push higher. And NQ. Looking for that big cloud above us here. That's that big gap we have. You got lots of market structures to break on the downside if you can catch yourself a nice short. If it's running without you. Canada's not exactly booming. Oh, we're doing okay. Don't get me wrong. I'm not judging my country against anybody's. This isn't about ours is better than yours bullshit. So don't get that wrong impression there, Kivo. I love Americans. I love America. I love everybody, man. There's no us, we're better than you bullshit. So okay. So there's our next objective, 6906. That puts us right in the middle of that new week opening gap. Yeah, it's been quite nice. We would have caught that early. That would have been a nice little run today. Gold, gold, gold. Yeah. That'd be nice to see that retest right there. It'll be nice to see that retest right there and stop. If it does come up, you can come all the way up into 48.62. But I'd love to see that just freeze right there on that 48.45-ish. Right there, and see that reverse and come lower now. That's a good one. Who called that? Russell? Look at the gold. Yes, Russell. That's nice. Yes, it's hitting a nice little level right there, bud. I love it. Right there. Nice. Body's respecting it. Keep on coming, man. Just remember, if it pulls back in here, the thing with gold, unless you're on a micro gold, this can be a big chunk. If you're on this as like 3 lots, it's a lot to put on there. And remember, you can come all the way back up in here and still be bearish. As long as it doesn't clear out that one on a close. You're right inside the bull trap. So you want to, how it's acting now is you want to see that aggressively start to run through here, not just start waffling around in here. You want to see that really get some aggression. It can come all the way up into 48.44, 48.48 right there. And that's an imbalance. That's an imbalance all the way up to here. You'd have to include this whole thing here. So when you're looking at this Russell, look right here, right there to there. Okay, that whole thing. I mean, you're just tagging it now, so you want to see this really react off of here, right? This swing, you want to see a continuation model now. I want to see that run lower. Wait for this to clear out, come back, retag that level, and use this as support. Otherwise, just wait here for a second and see what you get. Pull the fib tool on here and say to yourself, what's 50% of that? We're already above 50. Look at that. The body's respecting that. That's where you want to see that hold now and start really driving down. It's come back into the premium portion. It's obviously hit that box we're looking for, the no-go zone. Hit it and quit it. Quit it. Get off. Get down. Evo, we just need peace. I totally agree, man. Couldn't agree with you 100% more right there. We just need a lot of hearts, man. A lot of hearts. A lot of love going out there. Totally agree. NQ45 is loaded with options here where you may have a top at this point. We're running into that gap again. The new week opening gap. Send the love, my friends. Send the love. Love each other. It's a crazy world out there. Just love each other. We need peace. Loaded. Spread love, not hate. No solid entries for long after 10 a.m. I'm looking for 11 o'clock change in direction now. NQ already hit 6.22%. Okay, guys, 25,555. 25,555. Where's our this is 15. Where's our this is the hourly? Oh yeah, we're looking over here. There's our 60906 hit, done and dusted, sitting right on it. Oh Jesus, that would have been a nice little payday today. Got in that earlier. Still flat, still waiting. Follow the rules. Good for you, Russell. This is good for you, Russell. We're both having to hold out here. A couple of little shorts we're looking for, but they're not happening. The longs are paying out. I'm not taking back the money in a long just because we're really late in the run. So it's just a matter of waiting, being patient, man. You'll get it. It'll come. And the patience is good because it'll kind of give you, we're right up into that premium box now. Now I'd like to see that 69.08, which is just shy of this here. 69.08, what's the low of that candle? 69.0825. So we'll take this guy here and stick to 69.0825 right there. That's the next high point. I want to see this break and this break down here and start looking for a run lower. We can get a short. Spread buys, not sells. Let's see, that's 555. There's the 69.25, 68, 69.08. This is 69.08 up 25 right there. We hit that. Looks like we're not touching it because I have it at 50. There's the 25 devil there. So we've hit that right on the money. So now I want to see it start to turn here right at the top of that premium box and see if that is enough to turn us around. So if we run through here, the next objective is that 69.13. You see how that's a sensitive area? There's 75% right there of the new week opening gap, that is. See how that level is just bodies closing on it, opening on it. Just tap that 75% level. Let's see if that's just enough to just clear that out. If people are piling their stop losses up here and then just wanting to go short. Watch the mean threshold of this candle. Darren, could you look at silver? Yes, I can. I certainly can. 5 minute. You're already up in the premium portion of it here, Vitaly. If you didn't catch it here on a run higher, and as soon as it breaks that high, get yourself to break even and wait for the bull trap to let go. If the bull trap lets go, stay in your trade, and you're starting to target these levels above you here. Look for the next bull trap. Otherwise, if you didn't get in here, you're already up in the premium portion. Wait for that bull trap to let go. On a 1 minute chart, you didn't get a chance to get in here, so you wait for the next one. This is it right here. Trade through it. You come back into it. Bodies respect it. Go higher. Now, as soon as you get to 50%, take your stop loss move to break even. Pay yourself half. Come back and retest that level that would have taken you out by there. Wait for the market structure to shift to the upside. It does. If it comes back and tags it, great. There's your A level entry. That's a graded response right there. Send it higher. As soon as it takes out the high, move your stop loss to break even, pay yourself, or wait for this premium box to get hit. It just got hit right there, so you pay yourself there. That's the rules as I see them, and they're just my rules. So again, you decide your own. But as soon as you get to that level, you pay yourself at that level, move yourself to break even, because you're way up in the premium portion of that range already. So you got to make sure you're well protected and you've paid yourself. If it comes back and takes you out, then just wait. Wait for the next bull trap to let go, or wait for this level here to trade through it, and all you've got left is this one and this one here. They're overlapping. So I'd wait for the bull trap to let go first before considering going any higher. If you lose 50% of this on a close, which will close this out, then you look for a retest and send it lower, aiming for these lows here and this little SIBI down here below you. The 1 minute, that is. That's what I'd be looking for there. So your premium levels after the one that's just been hit is this guy here. That's P1, P2. So you've hit P1, we should get a retracement back into here and then a big drive back up. So that would be a price leg higher. So I'd expect to see something like this. You want to see it come back into here and then go higher, hit here, come back, tag this, run through, come back, tag the top of that, and then run higher. That's what I expect to see from this kind of thing. If it's bullish, it should give you this support here inside that candle. Send it higher. If it just keeps going higher from here, that's great. Watch for that to break. If that breaks, look for a retest of that. That would be somewhere around there. And then send it higher again, clear out the top of that, come back, find some support at that, and continue pushing higher. You're welcome. Key level, hey? Look at that. Just popped up there to that 75% of the range. Now I'm looking for a shift here. It's a small one, but it's a consolidation. I want to see a nice displacement candle here through this level. Nice big drop through here and give me a nice little graded response in here. But I need to see a candle that's showing me a direction here. Otherwise, obviously, you're still bullish overall. You're able, good for you, man. You caught most of this. That's excellent. So as it's coming back into here, I want to see a reversal here. So you want to see these kind of things, comes back, tags it. That's what you want to see in here. Because if that continues to run through, forget this noise. We're going lower, right? So that's as far down as I'd like to see that go. Graded response here, right? So A, B will put you right in there. So a nice little B level. Take your fib tool here, put your quarters chart on there, and go there to there. That's a C level trade right there. I've got that marked off. So A levels right there, all the way to 75%. 50% is our B level, C level, and a D is a full fill, which controlled there. So you really need to see this stay open for that to go higher. And right now it's coming off that 75% sweetly, sweetly. Watch this next level. I have to pee. All this nervous excitement. I'll be right back. Looking for the displacement candles, really. There's the drop down below. Come back in, get short. There you go. Be careful, Russell. You're in the middle of that zone, man. You'd have to wait for it to break through here. A little stop run. That's why you don't make that. You don't decide on the candle that's forming. You gotta wait. Yes. Now run back into that. I like that. I'm gonna short there. The stop loss has to go above that high. So I got 1, 2, all the way up inside this busy. I want to see this busy hold price back now. Preferably, I would like to see that candle hold price as well. Just come back and tap the edge of it and roll over and keep coming lower. But retest the old low is fine too. If it's aggressively going lower now, I want to see it really start picking up the pace here now that we've hit that level. Done for the day. That was stressful. Well, I hope you made off like a little bandit today there, Chris. I hope you did well, man. I'm sure if you were in a bullish run there today, you were making off 5 trades across 45 accounts. If I had hair, it would be gray. As soon as it takes that low, I'll move to break even. So I want to see this hold price now. I've traded below it. Come back inside it. Stop loss now will go just above here. I don't want to see that candle get taken to the upside. Otherwise, I'll take a smaller loss. That has to hold. That little trap there, that's what I wanted to see hold. It literally just wicked above it. Just came back to the old low there. So that's a real tap of the low. Send it lower. Average $450 per account, still on track. Good for you, buddy. Well done, Chris. Good on you, man. 45 accounts. Well, you could try for a record of 100. You did 100 accounts with $450 a piece. That's a nice $45,000 a day. That's nice. Now I'm just paying for the trade in case it works out. Great. If it doesn't, it doesn't. Don't worry about looking at that number. Move it to the side, get it out of your way, go into your account, close out that, and just work with your stop losses and stuff. Focus on the the run. So now I want to see this break this low because this has the potential to hold price and send it back up through the bull trap. That's why I'm going at break even plus the cost of the trade. Always time first. Yep. What was your 9:45 like this morning? 9:45. $10.45. How about that? A kiss on the nose, hey? Get change in direction here. I'm going to close that out. We'll come back and retest that one more time. We'll see this bull trap hold price, and there's a little imbalance down here. As soon as we ran above it, it's like, okay, we're coming back in. That's going to definitely take me out. So take the $100, move to the side. There's a small little SIBI in here as well. Like stretch all this out, you'll see it sitting in here. There's another SIBI right there. Imbalance right there. Wait for this structure to shift. If this is going to go higher, and all we did was just come back into this candle's wick, into 50% of the wick, and start going higher, then we want to see this break to the upside. Now I'm going to have to wait for a structure break here, like get below this level here. So we've got that change in direction. Catch it here, save yourself the stop loss. Now it's a matter of watching here. And what's above us right there? At 69.05. There's a small one right here at 69.06. And then there's a immediate rebalance to 69.08 again. Realistically, I can see expanding to about 55 accounts with the prop firms. I think it can be halfway trusted, looking to get moved over to completely private live accounts within the next few months, so I have better tax treatment and aren't dependent on props. Not to be stupid stuff with my accounts. I totally agree. Well, 45 accounts, you should have a nice little meaty account to play with by now. You should be able to run that up there quite nicely. Thing is, you can't multiply a small trade by that much. You literally have to put some huge loads on. So the advantages to having the prop firm is that if you have 45 accounts and you're just aiming for 450 bucks, then you multiply that by 45 versus one big account. Then you have to put in some huge ones to get the same effect. So you have to put on like 10 lots in order to get this response out of it. And if you're used to just trading 450 bucks at a time, the psychology behind that trading will be quite substantial, because you'll be like, holy crap, I'm not just gambling for $45 or 450 bucks anymore. I'm seriously trying to get 45,000. So I'm hitting 10 lots at a time. That will be your next psychological barrier to overcome, I would imagine anyway. So we're right up into that premium box. Ideal place for a short. Again, taking it, just waiting for a structure break, and then we'll see if we can get in for this one to go low again. A retest rate there would be a short. Stop loss has to go back above here. What I'm looking at here is we've ran through this on the downside. We've come back into that. That's like a no-go zone. I want to see that start pushing for the lows now. And you got to give it some wiggle room. So that's right up into here. If I start to close through that, then I'm out of the trade. Because if you look inside here, you'll see that we've just come back to that little SIBI we talked about earlier. We've hit that. Now we're reacting off that back to the premium. So I don't want to see us get through that. Next target is the mean threshold, so that should take me out there. So that's closed above, so now I have to pull my stop loss to here. I have to get out of my trade because it's already closed above the level I didn't want to see it get above. So if I get back to break even, I'll close that out. I'll trace that down here, right there. I'm out. It's broken that level. That's the rule. So your stop loss moves to here, and I just chase it back down until I get to a break even point and move to the sidelines because it's violated a rule of what I didn't want to see it break. So it's traded above it. It's coming back into this to go higher now. I'm sitting on the sidelines. So it's a quick way to kind of chase back your stop loss when you know you're on the wrong side. It closed, so you don't want to make your decision in the candle that's forming. So if it closes above that level, then I'm on the wrong side of that. If it comes back, I can get out of my trade. Then see how that quick snap back would have got me out anyway. So now you wait. If it comes back through, that's fine. It's just going choppy, so I'm not interested in chop. Gold's farting around right now, yeah. It's inside that zone, right? You're right in the 50% of it, so hard to pick. You're still inside that area allowable for a short. So if you're trying to maximize your short, stop loss would be right here. You wouldn't want to see it break above that. So ideally you want to see it close below here, retest it one more time and go lower because this has been filled now on the upside. So now you want to see that close through here, retest it and go lower. Then you're aiming for first one, second one, let the rest run. Wait for this structure to break here. Waiting on that one. And we're waiting on this one. You don't want to see wicks. You want to see bodies get below here. There's the retest of the little SIBI. Break through it, come back, retest, get a short. Now I want to see this really start to accelerate through here now. You're short in gold. Be careful, man. No confirmation yet. Yes, you are. If you're in here short and you take out that low, pay yourself, move to break even, and let it run. But if you're trying to enter in here, you're trying to chase this price right here, just be careful. You may get it. It looks like it's heading that way anyway. So you got that high, that open, and the mean threshold of that candle to go yet. Still nothing, hey? That's a retest. I like that for a short. I'll take that. The body's below here now. Stop loss again will go up above the high of that breaker. Let's see it run down lower. And NQ should continue coming lower as well. We've got a high, a change in direction. We've traced back into it. We have a SIBI, but with no run below the low. So we have nothing really over here. You want to see a market structure shift here. And this just keeps wicking down there. Doesn't want to get down there too fast. ES. It's made its little pop below that low now. Come back, retest it. Now I want to see it really accelerate through here. And start running lower. I get some speed here now. Right? And that speed will force this guy to come down lower. Ideally. How's your gold doing, Russell? And you're running for the discount box, which is where? Which one are you running for? Which time frame are you on there, Russell? So there's the run to that low. We're looking for a run lower. So we've hit that, and see how we've just traded through that level. We're wicking down in here. That candle has to, it didn't, see how it closed below it? Fail. Move to the sidelines. If you entered in long there, get out short, get your short off or long off right there now. Because now you're on the wrong side of it. Wait for it to break back up above the premium box. Because if your rule is, again, this is just my rule. If I trade below that on a close, that D level failed, it's an E trade. It's a failure. Oh, sorry, right here. That's not a failure yet. That's a full D level entry right there. I don't know why I had that sitting on that. That's the bottom right there of that. So it's a D level. You got a little pop through with the wick, but the bodies are respecting the low of that. So you want to see that go higher now. So if that's your perfect entry, stop loss would sit right there below that wick, because you don't want to see it come back down there anymore. That's a little damage it does. You don't want to see that. See how it's coming into here again? Don't want to see that. You want to see that just leave from here. So your stop loss is really tight. If you're long, ideal place to be. Stop loss really tight. If it acts properly, it should leave. If it doesn't, it'll come get you. And then you can get confirmation you're on the wrong side of it. So we're looking for this leg here now. Right there. See that leg? This is what you're looking for. We've got this leg done now. So the next leg would be like this one over here. Like that. Then we'll move that one to there. And then this one will go over there. So now, as soon as you take that high, I move my stop loss to break even. Your trade is risk-free right now. Give yourself a little nickels or dimes or whatever it is you want to pay yourself there. Move your break even. You should not have to revisit this low now. This is the leg you're looking for. Oops. That makes sense. So gold, what is gold up to? So it's just come down into here, Russell. The bodies have not broken that level yet. You've got to get a breakthrough there. Wicks are not enough. 480, 48, 31. That's where your discount box was looking on a 1 minute chart. If you hit it on a 2 minute chart, and if you shorted and got the discount box, excellent. You're out. But on a 5 minute chart, we have not broken that low of this. We're still banging around inside this SIBI here. Just want to keep seeing this leg continue to unfold here now. And what is our NQ doing? NQ's finally rolling over. Now I want to really see it accelerate here. And what's ES doing? ES is floundering around. You want to see that really pick up the pace now that we've got that come all the way to that level. Ooh, I'm going to go here. I was just about to go to break even on that. Nope, that'll take me out again. It took that low. I was too busy over there farting around. As soon as it took that low, should have gone to break even. That would have cost me nothing. Would have made, you could either pay yourself at that low or at least reduce this risk of this kind of shit happening, right? So E and Q, again, pulled back. No bodies below the low here yet. No bodies. A lot of chop. How much is that for losses that they had? 303, 301. So $1,100. That's too much chop for me. Let's see what gold's got. Coming back, silver. Get up there. Let's see you get through this premium box here. You see how that literally wicks do some damage there. Can really psych you out if you play in the candle that's forming. You wait for it to finish, and then you say to yourself, that's it. I don't want my stop loss will sit here. It would have come back, give you a little squeeze. Was that enough to psych you out? The psych candle. Then it closed up above. You go, ooh, that's good. Now I want to see it take that high out, and I'm moving to break even. Now I don't want to see it get back down here. Pay yourself when it gets to the premium box, and then wait for it to continue on here. So what you're looking for here now is this thing kind of thing to happen. You want to see that. Then you want to see that. And then you want to see this. Then this will come back into here. So this leg from here you're looking for a premium box and you've just got it right there. So you pay yourself right there. So all of you who are looking right there and you were like, no, that's going lower. That's the D level entry. So far, so good. Pay yourself. And now we're just waiting to see if that gets through here. So this leg to finish off now. So that would be like there. And we're looking for this one to go over here. This one to go back into there. And then we're looking for that one to go up to there and then back to here. Does not want to give up gold. No. Yeah, we're still stuck inside that SIBI. Silver's giving you what we want though. If you just traded from here to the premium box, you got, that's a pretty sizable. Just even putting one contract on that, that was probably worth $1,000. Now, if you blow this up bigger, you'll see that there's lots of opportunities for shorts and longs there. You take out the long, you come back inside it, go long, premium box, discount box, premium, so box to box. Retest this bearish candle and go higher. Higher time frames. We've had a wick down below the low here, but we haven't had a substantial displacement candle. So that could be just a stop run back inside this range. We may just go like sweeping both sides of the market here. If we close below here, this was there and this ends up going down here. So we're switched above here. There's a little run above this high here. Price imbalance. Wick. Wait for it to close. Don't act on the candle. Just wait for it to close. We just retested this SIBI one more time. It closed above that level, so we're still going higher. Looking for this premium box here to get finished off. So we're looking right there. You can include the SIBI if you want, right there. And I'm looking for this to come back all the way anywhere inside this leg. So this leg is done. This leg here is done when it gets to that. And then we see if it pops through here or not, or retraces. So this level can vary a little bit here. As long as this leg is a retest of this leg, we'll see it go higher. Is it finally breaking down now? Bastard, hey? Look at that. Stop loss tight. I want to see this break 3 here. And then our first presentation fair value gap, use that as support to go higher. There's the top tagged right there. Done and done. That's there. Now we're working on this leg. Oh, no, we're not working on this leg yet. We want to see a body close above here now. So this leg here can go higher or lower. So we're just hit a data point But that data point, how we act on that data point is important right now. So we're looking right here. Get above half of it. Close above in the upper half of that. And then we got ourselves a new rejection or a new extension model. This is just model 1, model 2, and now we're looking for model 3 and then model 4. Shit balls. We knew it was going lower. Just gave it that leg right there was enough to just take me out. So even if, yeah, I guess so. Fair enough. Pick the right direction, just a little too tight on the stop. No, not a little too tight. It violated my rule, so I'm out. I'm okay with that. And then it came back through, tagged it again, went lower, wait for structure break, went below it. Right there would have been the next entry for me, but I didn't take it because I was too busy over here chatting away on gold and silver. So if silver's just going to bang around inside here now, you're stuck between this premium and discount range. You could see this whole thing go all the way back down into here. And then that piece is not yet done. That leg just gives you the data point, but doesn't send it higher. This leg here now gives you a potential run all the way down into here, here, and all the way down into here. So this leg is a moving leg. It can move all the way down in this direction to here. Ideally, you want to see it just tag this right here like this, and go higher. So it would be something like that. Oh shit, that would have been a nice trade. Could have stayed in that longer, would have been a nice trade. Are you in this, Russell? You're still in this? Good for you, man. Short on UQ and ES. You're on both of them. Excellent day. Good work, man. This is your range you're looking at here, Derek. This one on here to here. 50% right here. And why do I say that, you say? Because if I'm looking for a premium box inside a range, I'd look for a discount box. There is no discount box here. The first discount box is over here, and that's included in this leg. So 50% is right here. That's how I look at it anyway. If you're pulling it from here, sorry. If you're pulling it from here, then yeah, 50%. There's no SIBI there to aim for, or here. So the SIBI is actually down here. So if you're doing a 50%, that's my first target. And then 62% is down, obviously a little lower. .62% puts us inside that other fair value gap we mentioned earlier, which is what we have marked here. So we've hit this level right there. We're reacting off it. That's good. That's this one right here. Now I want to see that start to get this leg higher now. And then you want to see the next pop back down into here. That can come all the way down into here. This leg is what we're working on now. Ideally, you want to see a retest of this somewhere inside here. Now, this would be great if it just pushes right through here and closes above here. Then I'd be looking for this leg to come back to here. Yeah, agree, Derek. Oil, ES. So now we get a retest of this level here. God, look at that right there again. Just pop below it, give it a kiss, and then send it lower. Extends the range. You have another market structure shift here. Looking for another market structure shift here. You have had a wick run the low. Now I want to see this wick get charged one more time. There's a tiny little imbalance right here. And here. Keep coming. There you go. Excellent. Pay yourself there. Stop loss breaks even. Keep going short. So I'm looking for this SIBI down here. This is the range I'm looking for. So this is the SIBI down here. That'll be a box-to-box trade on a large, nice long trade up. If you were to trading up and then you're catching this short for this downside box here. So now you've got market structure shifts all the way through. Now you got a clean run down into your civvy. Might bounce here out of both. Nice shorts. Bro is your gold rectangle. The F presented. Who are you talking to there, Derek? I'm not sure. That's a beautiful box to box. Yes, indeed. Where's silver now? Yeah, we're punching through here. Didn't clear above that half. See how we got wicks up there? No bodies up there. So that leg fails. We roll over and this leg continues to extend. So you can look for all the way down into this. If we break through this, then this leg does this. This, if we pop through, then this leg will pop back up into this. And then this one continues to go lower. So you see why those data points, you have to have a, we talked about it has to be, sorry, it has to be above that 50% of that circle. And it didn't, so it just wicked up there. So in other words, the discount premium held price, and we rolled over, and now we're coming back down into the discount. And if the discount fails, then we're looking for a run lower. That's your patience paying off there, Russell. That should tell you a lot. That should tell you why you wait for your entry, right? Why you wait for the rules, follow the rules, don't chase it, find patience, and you'll get what you need. So remember, anywhere in this leg here, tag in any one of these, this imbalance, and then this leg would be the new leg going higher. So you want to see this break the upside again above here, then we get this leg, because this new leg here is finished. That would be like done here. This new leg now is occurring. You want to see it close above here so that you can get a retest of this level. And again, that one can extend all the way down into here. Once we get a body close up here, this could still be this leg coming further down. So anyway, I hope you understand the graphics I'm trying to show you there. Maybe a silver and gold drop can help the US dollar. Yeah, we're still inside that civvy. Retest this breaker. Now right there is where you don't want to see it go any higher than that. I want to see that roll over here now. Otherwise, swing low. We don't get our civvy down here. You're always preparing yourself for the potential for this to roll over and start going higher. Once we get this bull trap taken to the upside, this could be another run higher. Right now, if you want to see that go lower, that's got to start turning right here and start coming back down. I guess you can come all the way up and fill that at 33.15. Send her down. Let's see, I want to see that shoot down from here now. Above here. $5-minute is a retest. Send it lower. Looking for a revisit on these old highs. This breaker, and then eventually box to box would be here. But there's no box in there. If you haven't caught that on a 1-minute chart, that 15-minute, we're looking for this breaker and that fair value gap below you. So that's good advice there you're getting from Lucas, Russell. So you got to watch out. If we take this out here on the upside, that's it for me. I'm done. I don't want to see this premium get taken out, which is also the bear trap or the bull trap. So I want to see that just retagging this low and send it lower. Take one there. To break even, zero stress, just let the rest run now. Let her buck, get down to mode. That'll recoup whatever I lost today. Might be on the other side of this daily fair value gap. This would have been crazy fun had I been able to stay in that. Yep. It's tagging it again. I guess I could take myself one more there. So just look for this touch at the top here at 68.57. There's an institutional order flow entry drill. So if that takes out the low, I'll move my stop to here. Yeah, the hourly, this looks like we could run all the way down into this discount down here, but we have to get through this order block here first. So I'm just looking for a first initial touch and see how we act through here. If we eat through the mean threshold here, I targeted this, or you'd have to target this immediate rebalance first and then start looking for this down here. Once we lose the 50% of that, you target the rest of this. So there's specific data points I'd be looking for. So that's I've only got one left on there now, so I'll just let that run to my profit. Or I can just treat it like this. Let's do this. I'll get rid of this and I'll treat it like a take profit model 3. That way it becomes the new take profit model 1. So I'm looking for here and I only got one left on there. So I'm going to watch and be above the reversal. The first take profit model 3 or reversal I see, that will close my short out. So I'm in profit. Move to in profit, no stress on the trade now. And we're hitting their discount box at 68.54. We're at 68.55 right now. So one more little tick down there. That'll hit our discount box. And what you could do is just close that. Oof. So if that closes right there above there now, I'm out. That's 44 more seconds. Chances are it's going to run back into here. And the wick can just do some damage, take me out here. That's the reverse right there. Change in direction for me for the time being, as we've just come down to the top of the discount box. So it will be a key time. I'm just going to close it out because it's going to take me out there. And you see, look, I closed that out already and it's still on. That's some kind of bullshit. They're saying, screw you, we're not letting you out of that. Come on, close me out. Close me out. Close the damn thing out. Close, close, close. It's not letting me close it out. That's some bullshit there. What did they end up giving me on that? 375. So they did give me the closeout further down here. So this could be just a retest of this. So for me to go bullish, we have to get back above here. We're targeting that there. So this is your 12 o'clock low. So this is potentially the run lower anyway, or the low on the run anyway, right into the discount box we're looking for here. So we could see one more little 12 o'clock push into here and then looking for a reversal. So that's kind of that range we talked about, Derek. You know, when you look at the larger range, where is that in terms of your that is 75, 79, right into that level. And this is a BISI SIBI overlap, right? Let's see if we can get down into here. So what I'll do is you can get back in on this for a continuation on the lows if we take this out here. Uh, 56 points for that one. Flat now, done, I think, unless someone says otherwise. I've had that happen a number of times in the last month. They need to work on that. Yeah, they do. It's a little frustrating. Props to all that got it. Now I'm done for the day. Good for you, Chris. I'm looking for my last and final run into here, and then we'll see how this this acts in here. Oops. We'll see what we get in here. I think that's going to be it for me today as well, guys. It's 12 o'clock, so I'm looking for any reversal here. I'm going to try and push this account a little higher now. We didn't get, all we did was get a retracement back into the premium, ran the lower, traded below it, back into it, ran lower. So looking for this box down here now for silver. It's a bit choppy today. Gold finally kind of letting go a little bit. That should give your American dollar a little lift. See how we closed below it again here, came back into it. That's what you want to see, the range extension right there. Now you really want to see it get some legs here and go lower now. That bull trap, you don't want to see that bull trap let go now. That bull trap's forming in here. We'll see what happens with this. If it becomes a SIBI, that becomes your bull trap. So you want to see that hold price to keep sending it lower. There's that run down into our level. Box to box. Beautiful run to the box trade. The next one is down here on your 1 minute. And those of you who are into the 3 a.m. marky mark, trades through, comes back to your 3 a.m., hits 3 a.m., trades through it, comes back to it, hits the 3 a.m., drives through the 3 a.m., see if it comes back into it and sends it lower. And we're looking for this box here next now. I think that's going to be it for me, you guys. Hope you enjoyed the show today. Thanks for everything. And remember, my political views, if they're not your political views, are not a reflection on how I feel about you guys. I love you guys all. I appreciate all of you. We are all allowed differing opinions and values, and I love you all the same. So with that, be kind to each other. Take care of each other out there, and I'll see you guys bright and early tomorrow morning. Thanks again for tuning in. I will see you guys. You all rock. You rock, Chris. You rock. Thank you very much, you guys. And thank you for your opinions. I love it. I love the feedback. I love the open, honest communication. And it works for me. That's how relationships work. Good, honest communication. Sometimes you don't agree, but it's okay. I still love you. So good luck with the rest of the day, you guys. Keep your eyes on the 12 o'clock swing point. This would be a great time to see a nice little swing here. 12:07, look for the number 7 minute candle to see if it comes back into here, and you get some reversal happening here on a Tibbs and a continuation. Love you more, Derek. Love you more. You're welcome, Kivo. Take care, guys. I'm sending the love, my friends. Can you feel it? I can feel it. You guys did really well today. I'm a little upset that I didn't catch the obvious run this morning, didn't press the trigger. And then when I pressed the trigger on some of the other ones, like the silver one or the whatever that was up there, I kind of didn't catch it long enough. But I got my money back. That's all that matters. We'll wait for the... Look at that. There's the 7. Is that the 7? It's the 7. 7 reverse. I wanted to see it hit this first before going lower, but whatever. Number 7, Tibbs, send her lower. Look for this down here. And then look for a reversal at 12 o'clock. So we're coming right into that first hourly SIBI right now. The D1 and D2 is way down here, so that'd be nice if we can keep pushing there. And if we push through that, the one on the discount, that's a big long retracement. Clear out all the liquidity that wants to go short, and send that like right back up into that cloud above us, and then smash it right down against everybody. So it just cleared out all the liquidity of the people that are sitting here wanted to go short, and ran out, took them out. And now we're going to pair them up with the people below the market here. So if we can get through this SIBI on the downside, look for a range extension continuation model on the hourly through here. That's my last little piece there. Love you guys, and I'll see you tomorrow. Oh, let me just check gold. Gold is looking good. If we can get back into 48.35, I might take a short there. And we've already ran below it, tagged it already, so it only makes sense that it could just leave from here. So if you want to just break out of this area here, wait for this mean threshold. See how the mean threshold's holding price right now? If it closes below that and uses it again to look for range extension, that's what I'd be looking for here. And catch gold on a nice little dive down below these lows. It's already made a little point to want to get down there. So if we have one more little run on this low, then this is a nice little pocket of cash down here. This is nice little, it's a gold zone. Gold and gold. Silver. Where are we looking for in silver? Silver still looking for this level, the discount box down here. We haven't got anything happening on the bull trap yet, so still looking for that to go. Bitcoin, those of you who are in, whoa, Bitcoin did a nice little run this morning. Look at that, breaking market structure to the downside, came back up, retested it, gets short there. Oh man, that would have been a nice little short at 11 o'clock this morning. Then that end it. So wait for bull traps to let go. Otherwise, retrace back into this zone, close below. Right there, retest, go low. That's a lower. I say lower on Bitcoin. Lower on Bitcoin. Look for this rejection block at 500. How's our DAX doing? Daxical. So look at that. Nice little retest there. Ran all the way back up. Hit our breaker. Bounced off the breaker. Did not even give you your premium box. That's why you got to keep this breaker in mind, right? Hits the breaker. Takes a little market structure shift there. Creates a new 15-minute fair value gap. Traded through it. Tagged it short right there. And you're back into this zone. So you're still in a premium looking for a discount. Pull your fib tool from here to here. And you would have caught a nice little run on there. See, you're above the 50%. Retag that. As soon as it hits 50, pay yourself. Move your stop loss to break even. 62, move to 50. And you're sitting right here. The stop loss, you paid yourself there. Wait for the next payment. Right. Come on. Do it before I go. Give it a kiss. Boof. Right there. Now you're right. You pay yourself a portion there. You move to 60%. Your internal range liquidity, hunt. You're tax-free. You're stress-free, not tax-free. Hell no, you're not tax-free. Yeah, that's it. Okay, I'm done. You're looking for here now. I'll see you guys tomorrow.